Bitcoin just flashed a warning signal, and most people are ignoring it. We are seeing bearish pressure on the higher timeframes, massive ETF outflows, and liquidity stacked below the current price. But here's the twist. There's also a short-term bullish signal forming. So the big question is simple. Is Bitcoin about to crash? Or is this the setup before a bounce? Let's break it down in the simplest way possible. Welcome back to the Wealthory AI Today. We're diving deep into the Bitcoin chart. We'll look at the 1 hour, 4 hour, and daily timeframes. We'll talk about support, resistance, liquidity, ETF flows, and what this all means for you as a trader or investor in the United States. By the end of this video, you'll know why a key warning signal is flashing, where Bitcoin could move next, and what levels actually matter right now. Let's get right into it. Section 1. The 1 hour chart, short-term downtrend. Right now on the 1 hour chart, Bitcoin is trading inside a descending channel. Think of a descending channel like a slide at a playground. The price keeps sliding lower between two slanted lines. Resistance is around 67.6K, and trending down support is around 65.4K, and also trending down. So short-term, we are in a downtrend. But here's where it gets interesting. We have a confirmed bullish divergence. What does that mean? Imagine Bitcoin makes a lower low. It drops lower than before. But the RSI momentum indicator makes a higher low. That tells us the selling pressure is getting weaker. It's like pushing a car downhill. Each push gets weaker. Eventually, the car slows down. That's what bullish divergence suggests. Either sideways choppy action or even a short-term bounce. But here's the catch. If Bitcoin drops below 66K, that bullish divergence is invalidated. And if that happens, then all that's left is pure downtrend. So keep your eyes on 66K. That's your short-term danger line. Section 2. The 4 hour chart. A failed pattern. Now let's zoom out. On the 4 hour chart, we were watching a potential ascending triangle. This pattern usually breaks upward. The breakout level was around 71.5K, but guess what? It never broke out. Instead, it broke down. That's called pattern invalidation. And when a bullish pattern fails, it often leads to bearish momentum. We also have something called hidden bearish divergence. This happens when price makes lower highs, RSI makes higher highs. That usually signals weakness under the surface. So on the 4 hour chart, things look more bearish. And if Bitcoin breaks below 65.1K, that's another major warning. Let me ask you something. If both the 1 hour and 4 hour charts break down together, do you think buyers will step in immediately? Probably not. That's where momentum can accelerate. Section 3. The daily chart, bigger picture trend. Now let's zoom out even more. On the daily time frame, Bitcoin is making lower highs, lower lows. That is the definition of a downtrend. Support right now sits between 66K and 65K. We just touched that area. If 65K breaks, the next major support zone is between 62K and 60K. That's a big drop. Resistance on the daily is between 67.5K and 70K. And here's the big one. For bulls to truly take control again, Bitcoin needs to move above 91.3K. Until that happens, the higher time frame bias remains bearish. There's also a bearish flag pattern that already broke down, with price targets around 52K and even 45K. Now, does that mean we crash tomorrow? No. Markets move in waves. There can be bounces along the way. But structurally, the trend is still down. Section 4. Bitcoin ETF outflows. Real money leaving now. Let's talk fundamentals. Yesterday, Bitcoin ETFs saw about $100 million in outflows in one day. That means institutions pulled money out. And this hasn't just happened once, it's been happening consistently. When ETFs see large outflows, that creates selling pressure. It's like draining water from a pool. The level drops. As long as this trend continues, it adds downward pressure to the price. So now ask yourself, do you want to fight institutional money or trade with the flow? Section 5. Liquidity. Where the market is hunting. Markets love liquidity. Liquidity is where stop losses sit. It's where big money goes hunting. On the 3-day time frame, we just swept liquidity around 66.5k. Now there's liquidity sitting at 68.5k above 64. 5k below and even more liquidity slightly below current price. That means there is risk to the downside. If the 1-hour bullish divergence fails, price could sweep 65k, then 64.5k. Quickly, yes, there's liquidity above too. But remember, as long as we stay inside the descending channel, targeting 72k doesn't make sense. Trend first, liquidity second. Always respect the trend. So what should you do? Here's the practical part. If you're thinking about shorting now after a 50% pullback, you're late. Yes, price could go lower. But after a big drop, counter-trend bounces are common. That's why trading lower time frames might make more sense right now instead of blindly holding a big short. Patience is key. Wait for confirmations. Watch 66k. Watch 65k. Let the market show its hand. Let's summarize. 1 hour, descending channel, bullish divergence, danger below, 66k. 4 hour, bearish divergence, failed breakout, warning below, 65. 1k daily, clear downtrend, major support at 62k. ETFs, 100 minuters outflows, institutional selling pressure, liquidity stacked below current price. So yes, warning signals are flashing, but the market hasn't fully broken yet. And that's what makes this moment critical. If you found this breakdown helpful, hit the like button so more people can understand what's really happening in Bitcoin. Comment below, do you think Bitcoin holds 65k? Or are we heading to 60k next? And if you're serious about mastering crypto trading step by step, subscribe and turn on notifications. We break down the charts daily in simple language. Remember, the goal is not to predict every move. The goal is to manage risk and stay in the game. Bitcoin rewards patience. It punishes emotion. Stay sharp, stay disciplined, and I'll see you in the next update.